Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the sideways action on the Bitcoin chart, as also we see sideways action in the stock market, as of course, retail takes profit off of the recent pumps. We do see, of course, that on Monday, we had indications that inflation may not be pulling back as much as we'd like. The New York Fed's 1-year inflation expectation was significantly higher than what was expected, as was their 5-year expectation, just a bit higher than expected. And so that does suggest that the Fed probably isn't going to go that easy on us in December. And then, of course, we can see just a whole bunch of other economic indicators have come out, some of them with a little bit of mixed results. But overall, we can see that household debt is just starting to skyrocket as consumers are starting to put things on their credit card rather than being able to just pay cash. And that does suggest that while we aren't really seeing a slowdown in retail in any particularly strong way, that we are getting hints of that, and the more that they put it on their credit cards, the more likely it is that that's all going to dry up pretty soon. Okay, so the Fed's policies are working, at least in terms of contracting the economy. It's just not working very quickly. And jobless claims, are continuing to rise. However, new jobless claims have actually dipped down a little bit. So perhaps that means that people are just trying to find a second job or something like that, or find another job if there's someone in the household. So you do have to just watch this data pretty carefully. Coming up, we will get some data for existing home sales and other leading economic indicators, and we can talk about that in another episode. But what's most important here is that the Fed's vice chair of supervision, Michael Barr, did meet with Congress to talk about guardrails for crypto. So Congress is getting very interested in crypto right now. His position is basically that there could be a contagion effect on the rest of the economy. And so Congress has to act pretty much in order to um, control crypto. And so that is fairly bearish for the industry, but it's also bullish in the sense that we're probably not going to see big institutions coming back into crypto until there are more regulations, because it is such a wild west place and things do just get off the rails pretty quickly. As we can see with the FTX and of course Alameda Research, their trading arm, trading and investment arm, the contagion from FTX has now spread not only to BlockFi, of course, but also to Gemini and Genesis. And guys, this is pretty serious. We don't know exactly the full extent of FTX's and Alameda's, reach in the industry and where they just had money in. And so it's very hard for people to invest right now if they can't reliably be assured that what they're investing in is stable, because it might have FTX or Alameda money tied to it. And so even assets, like certain coins or certain institutions could easily fail if they get destabilized by this, and it's just not over yet. So it will take a while for the market to sort out these details. And if you're just kind of chilling, like, no one would really blame you, okay? Like, you don't have to be a hero in this type of environment, especially as we see, for example, it's not just Democrats that are taking, money from FTX. There's been a lot made about how Sam had connections to Democrats, but the honest truth is that he also had huge connections to the Republican Party. And so while FTX and Alameda, they may have made significant contributions to the Biden campaign, you're gonna want to be interested in this. The crypto and investment CEOs weren't just buying Republicans or Democrats, they were trying to buy laws because they understand that the era of regulation is coming before us, right? And so the second largest donors to the Republican Party was actually Robin Hood, and no one's hands will come clean of this. It's all corrupt right now as people basically try to slosh money around to try to influence the future of crypto. So for example, of the 900 million in liquid assets, right, of FTX and Alameda, the largest portion, roughly half of it, was in the form of $470 million worth of Robinhood shares owned by a Bankman Fried, right? So there's that Bankman Fried guy, just popping up again, vehicle not listed in Friday's bankruptcy filings, which included 134 corporate entities, right? And that represented just 10% of the total assets. So, guys, this contagion is huge. And as you can see, like if we just look down, like what else is going on, Ken Griffin, the Citadel CEO, colluded with Robinhood to disable the buy button for numerous stocks in January 2021. We all know that Robinhood scandal, which just bankrupted a lot of regular retail people. This resulted in retail investors losing billions of dollars, guys. It's not a small deal. And then Griffin was the second largest donor to the Republican Party for the midterms. And so you can see that, we just have ties everywhere. Citadel, Robinhood, right? FTX, all of these guys are related. And you can see the second largest donors to the Republican Party and also one of the largest donors to the Biden campaign and, the Democrats. It's all tied back to Bankman Fried. Guys, I know you're going to hear a lot of conspiracy theories, but this was really a criminal enterprise, FTX and Alameda. And while you can try to just connect dots and strings and tie them on a board and all that stuff, don't forget that we have an equal amount of connections to both parties. These guys weren't trying to buy Republicans or Democrats, they were trying to buy the law. Period, right? Because these guys have a lot of liabilities right now, and I would be surprised if no one went to jail. But being one of the biggest donors for the Democrats and the second largest donor to the Republican Party, I mean, guys, like sometimes the bad guys get away with it. If we do look at the Bitcoin chart, I have updated the alpha momentum signals over here, so you can see I will be, just really, high time frame, a macro bullish above 20,885. That really hasn't changed. Solid bullish bias above 18,465. Going to be bullish above 17,235. Going to be neutral here around 16,850. And I will have a bearish bias under 16,800, okay? But let's just pay attention to this number because I'm going to come back to that. And the solid bearish bias is really the more significant number here, 16,640. We are approximately in that zone right now. So if we do lose that area, we will re-enter the solidly bearish zone for the day, okay? And then we're going to lose all of our momentum under 16,300, and that could suggest that we're going to test the lower levels here. Now, we do have a little bit of a naked candle exposure here, so there is some more liquidity to grab to the downside, even if we do push back up. But we also have a fairly sizable amount of liquidity up here that perhaps we could also just grab before a continuation to the downside. So both arguments do have merit, and we are just going sideways. If we look at the formation on the Bitcoin chart, you can see that we do have this wedge, and while we were putting in a head and shoulders, we never actually got that lower low to break the neckline, which would be 16,363. So that's another price, a key price to look for, 16,000. 16,363. If we do break that level, then we will have completed this head and shoulders, and that will have a measured move to the downside of approximately 15,400, which could put us underneath the previous low, which could initiate the flagpole for this bearish pennant that's being put in here, and that could take us all the way down to 10,000 to 12,000, with obviously probably a couple stops along the way. However, if we don't breach 16,363, and we are, as you can see, actually breaking out of this wedge to the upside, if we're able to hold above this solid bearish zone and get a little bit more into this ambiguous zone, then we can perhaps build up a momentum to have the invalidation move of this head and shoulders to approximately 17,500, maybe grab some liquidity up here and have a chance for some bullishness. So we are at a very critical juncture here. If I do put on the momentum pools, you can see that we are actually inside of the yesterday's 2 to 5 day projection. But that's no longer valid anymore. So we'll just look at the real day. And so for the real day, this alpha momentum pool is suggesting that we are just testing the bottom of the momentum pool, which is kind of interesting to see. And the 2 to 5 day projection, it's hard to see. It's just a little white line here because all the way through the 2 to 5 day projection, we have to hold that line, that $16,645 line. We have to hold it if we want to have any chance for the next 2 to 5 days to have some bullish momentum. And so it is interesting to see that based upon my momentum pool strategy, which is very unique to this channel, that's something that I created to contribute to the community in a different visual way than what you may be used to seeing. This is kind of a line in the sand there, that 16,645, at least until we can update on a new day. But guys, we are not above estimated neutral. We are just toying around with a solidly bearish. So don't get too bullish. However, please do be open-minded to bullishness because, again, we did break out of this wedge to the upside. We do seem to be bullishly retesting it as long as we stay above that solidly bearish zone. And if we can flip into this neutral territory, then we do have to be open-minded to some bullishness. Do not be a perma bear, don't be a perma bull, but just to be a clever little alpha monkey. And every day is a chance for a new trade. If we break back down into this wedge, probably we are going to explore the lows here, and that will have just been some type of a fake out. But guys, I'm going to wrap it up there. That was your alpha for the day. Stay safe and happy trading. Okay. Oh, and by the way, I don't know if I mentioned this, but a critical level is again 16,363. If we do drop back into this wedge, again, like that's the price that will complete the head and shoulders, which would move us to the downside and then potentially start to initiate just a bit more of a bearish chain of reaction. So we could just continue to go sideways and this wedge could get stretched out, but that's what we're looking at today. There's your alpha for the day. Stay safe. Happy trading.